Hey everyone, this is DayTraderRockStar, and today I'm doing a special video on high probability setups trading in the ES Mini. Now, normally I would do a 10 for 1,000 watch list on this weekend, and I am going to do a version of that also this weekend, but I think it's more important to get this video out because I know a lot of people are interested in the ES, and the market has pulled back drastically on Friday. So I don't want to be too aggressive going forward. Actually, I want to start, doing some good research. I have to make sure this market's going to hold up. There's a lot of turmoil in the Mideast here with Egypt, and we have to see if this is going to pull back. So we have to make sure that the market is actually stable here before we actually even make a decision on shorts or longs. I mean, this could be a very choppy weekend or a start of next week. So I have to just kind of be a little more on the cautious side. Watch the news, and we'll get out the stocks that we'll be looking for it next week, but we will try not to understand that there's some added risk on the table because of the geopolitical situation. But last Friday when we did have the riots in Greece, and there was Egypt, and Greece was the last one. We had that last flash crash. Friday kind of felt something in the market. I actually started feeling like the tension growing in the market, and I kind of related it back to Greece when we saw this the last time we saw the market sell off. So things are getting a little shaky here, and the market started selling off right away. And again, when something like that happens out of the blue, and you really, it's the first day of a big pullback where the market has been so stable and so resilient, it's sometimes hard to capture that drop. Now, what I like to do, and again, this is why I want to focus this video on the high probability setups and trading the ES Mini, is I use my 5 indicator method to trade stocks, but I also use it to trade the E-mini. And it's very important. The same concept, the same techniques are used, and it's because of the same reason. It's actually to give you the highest probability setup. And what that means in the ES Mini, in the case like last Friday where I did take a few of these trades, and that's as many as I take. I take maybe 2 to 4 trades on the E-mini a day. If I do take them, or I feel like the market's giving us opportunities, I trade them on the high probability setups, meaning I will only take them if I have a combination of indicators setting up. So we did see that on Friday, and I want to go over that with you and explain how that happened. Markets started off, and again, you see a bunch of lines on this chart. On the five indicators I use, the stochastics don't really come into play as much as stochastics on my regular stock charts, because this is a 1-minute chart and it becomes a very choppy indicator. I still use it for a reference, and I want to make sure it's definitely in a position where I want to feel comfortable with it. But it's very fast at this time frame, so I tend not to weight it that heavy, and I use trend lines, moving averages, and the pattern recognitions as my 3 main ones. So trend lines, we started developing a trend line after you start to develop a couple points in the trend line. In this case, we're going to take a look at the downtrend continue, and you can see actually the pivot point here drop through, and this is a good example of pivot points in the on the ES Mini chart here represent support and resistance lines, and it's calculated from the previous day's open and close and highs and lows. So the main pivot here is the neutral area, and anything trading below it would be negative, anything trading above it would be positive. So you can see that we drop through it, and because it's an area of interest, and I call it support line, once it becomes support and that support drops out, it becomes resistance. So you can actually see this pattern starting to develop in the market. The drop of the pivot to retest, and we retest up against the pivot area and against the 20-period moving average, which is a 2-indicator setup. And now, because that setup, you can't really put this trend line in yet because it hasn't really given us that pivot area. But once it gave that pivot area, then you could see it really came out and looked. So you have a real decent trend line here on top. And then with this trend line here, we're looking at it to really establish itself, but the third time is really the time it proves itself. So in this case, we got a very tight pattern. It's really hard to understand what's going on in the over in Egypt at this time. Everyone's just, market's getting very nervous, getting tighter and tighter range on the downtrend, and we're being held back by the 20-period moving average. And basically, we start to adapt. At this point, I start to notice that this bottom trend line is established because we've tested it once, twice, and 3 times now. And over here, we've tested this once and twice. So we're looking at both of these trend lines, and it actually pulled back here. And we finally broke through this trend line up to the 50-period moving average. Now, the trend line, the 20-period moving average, whenever the futures stay underneath that level, you know, you're really seeing a very bearish view in the markets at that point. And you know, trying to time that break to the upside, you're trying to time that with other indicators. But in this case, it's very tight consolidation. Stochastics have been embedded. You're not really getting anything, any type of signal. But the only signal you get is actually the first test of the 50-period moving average. So once you break through that 20-period moving average, the 50-period moving average becomes the next point of resistance. And usually the first test fails. So that was your first test of the 50, and we dropped right back down off of that level. And we came back down. All along this lower trend line is intact here. So as we see that the market is slowly coming down, I extend that trend line. I said, all right, we want to trade off of this trend line. Send out the alert that we're going to take a trade off of the trend line when it comes down to. And we can see it coming down to here. Right when it gets down here, we take a long position. And that's just basically what we're seeing is, again, a trend line support, a downward trend line, lower trend line support. You know, it's also very important to always keep in the back of your mind that stocks tend to drift off and bounce back to the 20-period moving average. Drift off, bounce back up to the 20. So whenever you have a deviation of price from that 20-period moving average, that rubber band effect is good. So you have a lot of things working for you on this pullback. First of all, the trend line is very important. You have the oversold stochastics, which were set up, and of course you got the 20-period moving average here above us. So again, we take that position there, and we get a nice, very nice trade off of that. And we bounce right up to the 20-period moving average. From that point, I take profits into that. But I also understand that there's probably a good shot that this point will become a critical part of the day. So I say pay attention for a further move up to that 50. And what happens? We moved right up here. We actually pulled back a little, but continued to move up to the 50-period moving average. Bounced off of that for a second. Bounced off of it again. And at this point, knowing, from my experience and knowing that this trend is really pretty much intact, and I don't think we're going to get through that 50. The 20 was very hard. There was no news that was changing in the markets. That 50-period move, there was really no reason to move up higher. So I took a short at this point here, right in the square area, because stochastics became overbought. And from that point on, we did have that drop off, and I just covered that for 3 points. And understandably, seeing the recent low, and there's a pattern that shows up in these type of days. And usually, if you're going to get any significant bounce, it's going to cause a retest of the bottom, and that usually happens between 1 and 2 hours after their initial low. So we're coming back down there, and it was a good chance that we were going to come down to that low on the thing. So we marked that out and said, watch for that double bounce, double bottom area for a trade. And we got pretty close to it. I mean, the closing candlestick kind of spiked down here. We could probably move this candlestick up a little and to the closing bar, and you'll see that was pretty much a perfect hit. And it's always about the closing candlestick. It's always about the body and not about the tail. So you leave that, and you can see that the body held above that recent body. And it could be off a couple pennies, not a big deal. But it was a nice little bounce there, and then we bounced up against the 50 again, and then we finally bounced back down. This time we actually kind of came down to the lower candlestick now. Went a little bit further, kind of flushed a little, and then bounced back up. But overall, this whole double bottom actually held up really well. And we pushed up against the 200-period moving average. And at this point, this was the first test of the 200-period moving average. And again, it's another opportunity to short. And this is a trending market to the downside based on political news. So it's nothing damaging to the market other than, the market has been scared before, and we've seen this before. So I want to be very cautious going into the next week. And what I want to do is concentrate more on the E-mini. A lot of people in the room trade the futures, so I want to concentrate a little bit more, taking the shorter term trades on the stocks. And I actually do have a watch list that I am going to put out after this, but I wanted to get this video out also. So I hope you enjoy this. And we're trying to do this in high definition, working on some new video techniques and stuff. So hopefully you enjoyed this video. And any questions, of course, you could catch me on Day Trading Radio Monday morning, early, 8:30 till 4 o'clock. So I'll see everyone out there.